This episode will be a rare opportunity to understand shipping, the backbone of the global economy, with my guest, Pankaj Khanna, the CEO of Heidmar, a Nasdaq-listed company. Pankaj, welcome.
Hi,
Great to have you here.
how are you?
Very well, thank you. I know you're calling me from Athens, Greece, that your company is Nasdaq listed, and I saw that you're educated in the UK. But could you start by giving us your background and a little bit of explanation about what Heidmar is?
Yes, I come from India. I started my career when I was 18 years old, actually working on ships as a cadet. So I stayed for about 7 years. I got my chief mate license and then I moved to the shore side. I moved from India to the UK in 1996, 97. I did my postgraduate diploma in shipping. Since then, I've done various ship owning companies where I have worked oil tankers, so crude oil and petroleum product, liquefied natural gas tankers, liquefied petroleum gas tankers, bulk carriers, other types of vessels. And I've also run a company which did ultra deepwater drilling. I got involved with Heidmar in 2019. In May of 19, became the CEO of Heidmar. In November 2020, I did a management buyout and bought out the company. Heidmar has been around for 41 years. When I bought out the company in 2020, we actually had shrunk a lot. We were down to 6 ships under management and only 6 people. But Heidmar has a very strong brand name in the industry. So combined with my relationships and contacts and the Heidmar brand name, we have basically grown the company back to today where we manage 65 vessels, technical management and commercial management. We are based in now 6 offices around the world, 65 people. We manage tankers, everything from 8,000 ton ships all the way up to VLCCs, which are 310, 320,000 deadweight vessels. Heidmar is today what I would call a one-stop shop. So we provide marine services. We are not a ship owner. So we do everything from identifying what is a good project for a financial investor, helping them acquire the vessel. So we actually have a ship broker in-house who helps the acquisition of the vessel. Then we provide financial advisory where we advise the client on where to do the financing and guide them to that. Then we do the corporate setup, we do the technical management, so we provide the crews and the management systems to run the ship. And then finally, we provide the employment of the vessels, commercial management. So the investor only needs to collect the money and monitor the inflows and take the decisions. And all the rest of the execution is done by us.
Okay, there's so many questions there, but this is fascinating. I mean, there's a lot going on in the history of the company, the services, and your personal history. And I just want to touch a bit on that because you started as a cadet and then now you're CEO of a major company. Obviously, not everyone becomes a CEO, but is the entry point of the cadet to higher careers or is yours totally exceptional in that respect?
Look, 95% of my peers, other CEOs, have never been out at sea. I'm one of the few who actually has got to this point where not only that I am the CEO, but I own 45% shares of this company. There was another company called Pioneer that I founded. We invested almost $500 million in dry bulk carriers. So my career is a bit unusual. It's in some sense like a blazer, but this industry provides certain opportunities, and I've been lucky enough to be at the right place, right time, and have taken those opportunities as they came along.
Yeah, very interesting. You mentioned Norwegia, Norway, Greece. Those are countries that often come up. And as a Greek, there's also this kind of aura about the industry, right? Where people might not be captains, but it's still like this thing about being at sea. What drove you to this in the first place?
Look, when I started the career way back in 1988, actually wanted to go into the Indian Navy and work in the forces. And then I did not get in there. And then there was a merchant navy. A friend of mine was going for an interview, and he said, "Oh, do you want to come along?" So I just happened to go along as a 18-year-old. I got interested in the industry, and he did not get in or stay in, and I did, and I carried on, made a career of it. The good thing about shipping is that it's a global industry. Also, it's affected by macroeconomics, so it's not a niche industry in a little area. So I've lived in all the continents. I have worked in all the places. I've traveled all over the place, and even today, I love what I do because it changes on a day-to-day basis, and the opportunities are humongous because we are talking about carrying oil and gas. We're talking about drilling for oil and gas. These kind of things that, as human beings, we cannot live without. And I think the events over the last couple of years have brought back the realization that all this thing that we talk about, renewables, etc. Yeah, that's all fine, and I think it will come in some time where renewables will be the thing. But without oil and gas, daily life in terms of basics of life cannot be facilitated.
Yeah, fascinating. We only talk about shipping when there's a conflict, like there was in Iran, but it's 80% of all traded goods by volume, which, if you think about it carefully, it's mind blowing. And before we talk about the role in the global economy, etc., I wanted to try to get a better grip of what you discussed earlier about the management of tankers. Who are those investors who are looking into buying, or I don't know if it's buying, renting a tanker? And what's involved in all that? What are those ships and what do we do with them?
Yeah. So let's start with what is technical management. Basically, technical management is the provision of crews on board. So obviously, you have a ship, it has to be run by people. It's not run by AI. There's no automation as yet. We have about 22 people on board, so we provide the crews on board. The vessel has to have a ship management system, what's called a SMS. And so we provide this SMS. We have a document of compliance. So effectively, we provide the people that run the vessels and the systems that run the vessel. And that vessel basically then carries the cargo from port A to port B. And the cargo that we carry is either crude oil or petroleum products, so after it has been refined. And then the other business that we do is commercial management. Commercial management is the provision of employment. So Heidmar has been around for 41 years. We have been KYC'd, know your client, KYC'd by every oil company on the planet and every trader on the planet. So if you want to go take your $120 million ship and you go to Aramco, the Saudi national company, or you go to Exxon or Chevron and say, I'm Mr. X, I've just bought a ship and I want to carry your cargo from port A to port B. They will look at you and say, sorry, I don't know who you are and we cannot work with you. Your ship may be brand new, 120 million, comes just straight from the shipyard, but we are unaware of who you are. Aramco, to do their KYC, if they decide to do the KYC on you, takes 12 months. The same process is with Exxon, Shell, Chevron, BP, so on. Heidmar has been KYC cleared by every oil company in the world. We've been working with them for 41 years. So when an owner buys a ship and says, I've just bought this ship, I want this ship to earn money, can you help us, Mr. Heidmar, to get the employment of the vessel? So we basically take the ship from the owner and we employ it with an oil company or a trader that we work with. And then we charge a fee for doing that. So the same for technical management, we charge $1 per day fee. For the commercial management, we charge $1 per day fee, plus we charge a percentage of gross commission. That's of the gross freight. So let's say the freight today, I was just talking to my trader this morning, and the freight today from Arabian Gulf to China is $35 million. Our commission, and that's on a very large crude carrier, that would carry 2 million barrels of crude oil. So our commission on that 35 million is 1.75%. So if I run like 35 million at 1.75%, that's $100,000 is what our commission would be for that one fixture. Plus we charge some dollar per day fees as well. So that's the business that we do primarily. Now, we asked about who are the investors. There are two types mainly. It's a financial investor that can be a high net worth individual, can be a institutional investor, a fund that says, okay, I have $200 million to invest and I want you to go out and find me good investments to put that in. It could be a sovereign wealth fund that wants to. And then on the other side are what are called strategics, ship owners. Guys who want to become a ship owner, they're not necessarily in the business or could be in the business. They could be a dry cargo ship owner or a container ship owner that wants to get into tankers. So we assist them in acquiring the asset, managing the asset, finding employment for the asset. And then it could be owners that own small vessels. They own an MR tanker of 45,000 deadweight, and now they've made money and they want to buy a bigger ship. So again, we assist them in buying that larger vessel and managing that vessel. So effectively, we are there facilitating people's investments in tankers, and that's our business today. But we are also equipping ourselves to diversify. In the future, we will also do dry cargo vessels. We will also do container vessels. We are already doing some dry cargo vessels on the margin.
And if, let's say, we take a specific example of a financial investor, maybe institutional investor, the rationale behind it is to say, I want to allocate, I see an opportunity in this freight play. I've got money to dedicate to it, but obviously I'm not gonna I'm not gonna hire everyone and manage and that would be what then they come to you, and you do everything, including finding the actual buyer and seller and route. Is that it? Is
Yes,
that
so I
correct?
effectively for, let's say, a financial investor gets involved because the returns are very attractive. Either the long-term returns or depending on the time of the cycle, the short-term returns can be very attractive as well. So they come in and say, okay, I like the tanker sector. I like the returns over here. Tell me which is the sector, which is the size to get into. So today I would say, let's go buy a VLCC, a 5-year-old, very large crude carrier that can carry 2 million barrels of oil. A 5-year-old is worth about 140 million. Sounds like a lot of money, but on that $140 million ship, I can fix the first voyage today at 35 million. That's the gross rate. Now, from the 35 million, if I take out the cost, the fuel cost, the port cost, etc., the net cost in the pocket of the owner is about net freight in the pocket is $30 million. So on that $140 million ship, you can do one voyage of 40 days and you make $30 million in your pocket. If you are able to repeat this a couple of voyages, effectively in 3, 4 voyages, you have made back like $100 million on a $140 million ship. And that $140 million ship has a 20-year remaining life. So in a matter of months, you can make a huge returns. Of course, this is based on today's market because there was a war in Iran. The Middle East Gulf was closed for quite some time. Freight rates are at super elevated level, at record levels. But even in the long-term cycle, there are very attractive investments in tankers. So that's why investors come to us and say, hey, I like the sector. Find me a good deal to do. I'm just preparing a one pager for a fund based in the Middle East where I'm recommending a small tanker. It's a 38,000 deadweight tanker. They like older assets, less risk, don't want to put 140 million to work. The value of the asset is 12 and a half, 13 million. So I have tailored the.
So you're not just facilitating; it's also tailoring, advising, etc. Because obviously there's ships and there's routes and there's, I suppose, a lot of different options, and you translate it into a risk and return profile, right?
There's the inbound inquiry where people come to us and say, hey, I bought a ship, take the technical management. I bought a ship, take the commercial management. But I'm also creating opportunities by going to investors and saying, hey, there's an opportunity to invest in the sector in this size. Why don't you do that? And for that, everything that I do. So let's say this investor buys the ship for, I don't know, 50 million. I charge 1% fee for facilitating the purchase of the vessel. Let's say the financing on that ship is $35 million. I charge 1% of the 35 million for facilitating the financing of the ship. For technical management, I charge $500 per day fee. For commercial management, I charge 1.25 plus the fee. Eventually, when I sell the vessel, I charge a fee. So everywhere, wherever I touch this vessel in the cycle, I'm making money. So this is how we make money. We create opportunities besides just having inbounds from people who come and seek our services.
Yeah. No, I also understand it given the margin that there is on the core business, because for someone who, like you mentioned, you make 20% or 25 or 30% in one trip, that's the big opportunity that you want to focus on. And then this 1% here and there that's facilitating and letting you focus maybe on the bigger picture is from a total outsider. It seems like, oh, okay, this is a no-brainer. And that comes to my next question, which again is a bit biased from a Greek perspective, and the idea of ship owners, right? That's what we talk about, and there's some very famous ones, and Greece is known for that. But there's this idea again, the captain, not necessarily on the of a ship, but captain of the company that owns the ship and manages everything. What you're describing is actually quite different from that. There's the ownership, the management, the different layers of management. You said commercial, technical, etc. And therefore, rather than those who play this, they're ship owners because they own the ships, but they can be very astute investors who are not particularly, who don't have a particular affinity with ship owning, but see it as a financial opportunity that you need to materialize physically or something like that. Is that a good way to describe it?
So look, in the old days, 30 years, 40 years ago, you could be a captain on board a ship and come home and say, oh, I see an opportunity. I have a little bit of money. I will go to the bank. I will raise 98% of the purchase price in debt, sometimes even 100, 105% in debt. And I will go buy a ship and I will start from scratch and I know everything about the ship. So I will do the technical, I will do the commercial, everything will be in-house. I will do the financing. This was the old days. Today, with regulation, with the changes that have happened, consolidation, there is no room for a single vessel, two vessel, three vessel ship owner. There are people who own one, two, three vessels, but it's not efficient. And you don't have scale, you don't have the attention of the financing community, and you don't have any pricing power. So you have to use consolidators like Heidmar in the market who have scale. So, I'm running a 65 vessel fleet. I've been around for 41 years. When I pick up the phone to Chevron or to Exxon or Shell, people talk to me because I am Heidmar. I've been working with them for 41 years. If you are a single vessel owner and you pick up the phone and call Chevron, they'll be like, who? Why? What should I? They will not even most likely pick up the phone. The industry has changed. It's no longer the romantic thing of
Yeah,
those days are gone.
yeah, that's my silly idea, but I think it's still there somewhere. And may I ask, Heidmar is called the Uber of shipping, and I think we've clearly understood in the business model. There's also an aspect of technology which is very relevant for Uber because obviously it's not just that they have connected all the taxis, it's also that whatever, they have an interface and for the clients, for the tax, etc. And that's what makes a difference. And that's also what probably allows them now to charge extra, but that's another story. But yeah, how's that? So we understand the connection. How is the tech or other aspect of it that you provide to facilitate that?
Yeah, look, we digitalized 20 years ago. We were at the forefront in the industry. We were the first operating platform that was set up 20 years ago in the industry to run tankers. So effectively, we don't work and have not worked for 20 years in Excel or databases, etc. We have an ERP system. When a cargo appears, it is entered into our system. A vessel appears, it's entered into our system. And from that point onwards, everything is on the system. We run freight rates estimates, so we could be running 5 different cargoes for that one vessel to see which is the best cargo for us to take, how to optimize the voyage, what is the best earnings for that vessel, not just for that voyage, but for the next voyage and the next voyage. So we plan for all of that on the system. All the operations, all of the voyage costs, all of basically everything that we do on the voyage is run on this ERP system. And then it goes to invoicing. Then it goes from there, connects to an accounting system. So effectively, all the data moves across to the accounting system, gets processed in the accounting system, gets back into the ERP system. And then our clients, the owners, basically get all their reporting on this system as well. So we don't email out any reports. Everything is online, and this has been done for the last 15, 20 years. It's not something that we did in the last 5 years. So this today we are sitting on 40 terabytes, maybe it's 50 terabytes today, about 50 terabytes of data going back 20 years. Emails, so structured data and unstructured data. So emails and various other things, filing systems and the ERP system. Now we are in the process, and the reason I'm so current on how much data we have is that we are just installing an AI-based system on top of all this structured and unstructured data to basically help us optimize all our processes. We are not going to let go any people, but we're going to optimize our processes with AI so that all the processing, day-to-day work, verifying that the ship positions are correct, that the weather reported by the ship is correct, that the ships are following the right weather routes, etc. All of that will be done with the assistance of AI. This will free up the people, the voyage managers, to help either make more money or save more money. So right now the guys are one small example. So if a vessel gets fixed, let's say it's fixed to Aramco for Ras Al Noura, we have to clear the Ras Al Noura terminal requirements, blah blah. So an operator has to spend 2-3 hours collecting all the documents, which are like 12, 15 documents, fill out some forms, draft up an email, and send it out to the terminal. And that's just one. And he has to probably send 5, 6 emails like that. So going forward, the new system that we are installing is going to do all of that. The operator is going to set it up one time. Once it is set up, going forward, he will just click the button, send the reports for Aramco to get the clearances, whatever. The system will draft an email, will put the email address in, will attach all the documents, will fill out the forms, and then the operator, only thing he has to do is review and it will be sent out. The saving for the operator is like 6, 7 hours of work that will be down to 5 minutes. So he will or she will then have way more time to actually look at optimizing the voyage and making more money. So we are in the process of doing that. I just described one little function that we, but optimization in terms of the best routes to take, best weather routes to take, what cargoes to take, optimization on legal side in terms of cases, optimization for me as CEO in terms of running the company. It's going to.
That innovation is really fascinating. We hear a lot on the podcast as we discuss with a lot of investment technologists, and therefore there's a lot of data, and therefore there's AI, and then there's AI agents as a natural evolution. And we see that it's happening in industry as well. And I'll get back to that and the outlook for the industry and the potential for innovation or even disruption. But first, I wanted to get a more complete picture of the ecosystem. We mentioned already Heidmar's central role, the ship owners and investors. But what is, for example, the role of traders?
So traders in our business are almost synonymous with the oil companies. There's very little difference. The traders may not have as many producing assets or refineries, but actually the largest traders, so for example, Vitol or Trafigura, also own refineries, also may own producing assets, oil and gas, are also involved in LNG now. And then on the other side, the oil companies are all also trading. For example, ADNOC, UAE oil company, has a trader called ADMIC. Aramco, the national oil company of Saudi Arabia, has a trading company called ATC. BP trades, Total trades, everybody is trading. So I think the big difference between the traders and the oil cos has faded a bit. However, traders perform a very important function in the industry where they are picking up the oil production from certain countries. So, for example, a lot of the production from Nigeria used to be handled by the traders. In the past, a lot of the Russian oil production was handled by the traders. Now, when Iran is starting to export again under US general license, again, many people are hesitant to buy directly from Iran. So the traders will step in, like Trafigura, Vitol, Mercury, or whoever, and then they will sell the oil on to other people. So traders have a very critical role. We work very closely with the traders. So both Vitol and Trafigura are one of our largest clients. We do a lot of work with Mercuria and also with a lot of the smaller traders as well. And traders basically facilitate the market in terms of moving oil. We provide the freight, but they provide the financing and the facilitation that other people cannot do. In terms of the futures market for oil and the paper market, as you know, the futures market is much larger than physical oil. On the freight side, the futures market is not as big. We have used the futures market and the paper market a bit. But people come to us because they want exposure to the spot market. So they come to us because we are the Uber of shipping. So they want to have this port A to port B maximum earnings. So they don't want to go and do the long term lease and be 6 months lease, 12 months, or 3 year lease. That's why they come to us. Because over time, the spot earnings are higher than the long term lease earnings. This has been proven through history. This is our role. This is our expertise is to run.
Another aspect of shipping is its cyclicality. Can you expand on that and how the industry deals with it?
Look, there's no demand for the ship per se, right? The demand is for the commodity. So we carry oil. Oil is impacted by geopolitics. There's no way around it. So effectively, every black swan event affects oil prices, availability of oil, how much oil is exported, and also, in a certain sense, affects the demand for oil. So far, demand for oil has been resilient, and through all the crises, has never really come down as such. Has always continued to increase. The intensity of the global economy and the connection with the oil has reduced. So it's not as intensive as it used to be, but still, there is growth in population, there's growth in the world economy, and it is connected with oil. So there is the oil cycle in terms of demand and supply. And then there is the ship cycle, which is connected to the demand, which comes from not just the volume of oil we move, but also the distance that we move. So imagine if oil was being moved only from Iran to India, short voyage, very close to each other. So you need, let's say, 10 ships to do that. Now, if that same amount of oil had to move, the voyage from Iran to India is call it 7, 8 days. Now, if the same oil had to move from Iran to Japan, which is a 30-day voyage, so it's 4 times the distance, obviously you cannot do it with 10 ships anymore. Now you have to require, you need 4 times as many ships to move that same amount of oil because the distance has increased. So this is another factor that impacts what we do. So there is the route makes a big difference. The volume of oil that we move makes a big difference, and then of course where that oil is coming from. In terms of cyclicality, it is the industry is highly cyclical with the oil, right? And then there are the number of ships available. Ship owners, when they make a lot of money, they want to renew their fleet. It's a depreciating asset. The life of the asset is about 25 years. Typically, around 25 years is when a ship gets scrapped or recycled. And so that's the life of the vessel. Every shipping company typically depreciates the asset over 25 years. So you require new buildings to renew your fleet, and the timing of the new buildings is not tied exactly to when the ships are turning 25. So depending on the cycle and how much money people have, they go out and order ships. And that can create an imbalance in the fleet demand and supply, and that also it creates opportunity in terms of cyclicality. So the industry is highly cyclical. So how to get around the cyclicality is that make sure you buy low, you sell high. That's number one, the most important principle. But even more important than that is your balance sheet. So if you are going to take on an inordinate amount of leverage or debt to finance your ships, first of all, if you buy at the high point, and you lever up at a very high level, you have created your own debt trap. And this is when companies go bankrupt, where they buy assets at super high values, they put on 70, 80% leverage, market comes down, the banks are now knocking at their door saying, hey, you are in violation of your asset covenants. And then, of course, cash flow also comes down, and now you have to service this huge amount of debt. That's when companies go bankrupt. The good companies, which last through cycles, which there are many of now, because the companies have become very strong, have paid down a lot of debt, are actually today carrying debt levels of 20, 30%. So the debt is at very, very low levels as compared to historical past. The average debt companies carry were generally between 50 to 60%. So the debt is very low, and they're cash rich. Most of the shipping companies in the industry are sitting on 1, 2, 3, 4 billion of cash. May not be sitting just on that balance sheet. They may have dividend out. There may be private ship owners who have put it somewhere else, but effectively they have made that kind of returns over the last 5 years. So the industry insulates itself by having lower leverage and having strong balance sheets. So this is the key to survive, because in shipping you need to be around. The cycle will turn. If we are in the low cycle, the cycle will turn up, and at some stage the up cycle will turn down. So you want to be there in both those cycles, because when the cycle is up, obviously you want to make the most amount of money. But when the cycle is down, you need to have cash so you can buy assets at that low point of the cycle.
And why this Heidmar's perspective on this cyclicality?
Now, so firstly, Heidmar has zero debt, so we have no leverage whatsoever. Number two, we have zero capex, so my business does not require any capex whatsoever. So, people say Heidmar is asset light. We are not asset light. We have no assets. So, other than having desks and PCs, etc., we have no assets. We don't own any offices, nothing. So, to grow, for example, I have marginal costs, but I have no capex. I need to, so for every ship that comes in, if I need additional people, then I get people only if I have additional ships. So basically, the income that is coming in funds the growth. And also, my working capital requirement is virtually zero. So the business self funds from the fees which are coming in. So that's one critical factor. And where we are different from our clients are the ones who are exposed fully to the cycle because they're making large capex investments in buying vessels and so on. We are providing services. So regardless of where things are in the cycle, we make our fee. We make more money in the upcycle where the rates are super high.
So it doesn't look like it's an industry that's about to be disrupted fully by AI, but the efficiency of the process and the way people operate could still change dramatically, right?
Yeah, so the industry is very capex heavy. So in today's market, if you want to buy the VLCC, like I said, a new building VLCC could be as much as, to go in order today is $130 million, and you get it in 2029. Ships which are on the water could be as much as 160, $170 million, and that's for one vessel. So when you are in that industry, maybe will inform your decisions better so that you will have more visibility. The data is already there, but you will have more analysis, more visibility on the cycle going forward. But the capex is there. You cannot avoid the capex. So I don't think AI disrupts our business. If anything, actually, what has happened with the war, what has become clear is that the countries require diversification of oil supply. Japan was importing 95% of their crude oil from the Middle East. It's an unsustainable position. As a CEO of a company, if I went out and told an investor that I'm importing 95% of my energy from one source, their investors would look at me and say, "Why do you have so much concentration risk?" But Japan has been doing it till today. So Japan has to diversify their sources of crude oil imports. So if they don't get it from the AG, where are they going to get it from? They have to go to Guyana, to Brazil, to the US Gulf, to West Africa, all sources which are further than the Arabian Gulf. That will lead to longer distances, more demand. The other aspect is storage. Most people have realized, most countries have realized, in Asia especially, that they didn't have storage. The only two countries in Asia that had adequate storage was Japan and China. China sold a lot of their oils, which they bought at like 50, $60, at 120, $140. Japan released a lot of that oil into their domestic markets and some in the international markets. But the rest of the countries had no storage. So they had fuel rationing, shortages, etc. So all those countries now realize that they have to build some storage. And China and Japan that use the storage also have to rebuild storage. And not just the US crude oil stocks today are down to levels last seen in the early 1980s. We have not seen these levels for all those years. Stocks are going to get rebuilt as well. So over the next 12 months, we expect that there is a very strong upcycle for oil tankers because there will be increasing distances and also increased demand because storage needs to be rebuilt and additional storage needs to be built.
What are some typical misconceptions about the shipping industry?
People, let's say some investors got a bit jaded because the shipping markets were stagnant through the, let's say from 2015 to 2020, there wasn't a lot of excitement in shipping. But then COVID happened, dry bulk, containers, and tankers since the Ukraine war started have made, the only way to describe it is a crazy amount of money. And so the interest is come back. So the industry is volatile, and it's across the board, whether it's tankers, bulkers, containers, chemical, whatever. It is cyclical, but there are very strong companies in there as well. So there is always a time to invest, depending on when it is. But investors today, especially in the public markets, the institutional investors are, looking for like large companies and want to do big things, where shipping does not offer that. So that's why I think shipping is more for.
What's the most common mistake you see, or what's the typical pitfall in the traditional approach of outsider investors when they come into the industry?
So I think it's what I would say. You have to identify companies which are value investments, so that you hold for the long time, and then there are the trading plays that you play the cycle, and identifying that is critical, because if you get into a cyclical short-term play, a trading play, and you think it's a value investment and you hold on for too long, you lose a lot of money. And then you say, oh, well, shipping is bad. No, if you know that it's a cyclical trading play, then you know that you get in, get out. It's not a long-term hold. On the other hand, if you identify that this is a good management team, their business model is good, this is a value investment that over time could really work out. There have been companies that have returned 4, 5, 6x in shipping. So I think what people get wrong is really identifying a cyclical trading play versus a long-term value investment. I think that is the critical differentiation.
Thank you so much. I think we've covered a lot, and it's been a masterclass in how this industry that is so important for the economy and financial market works. Is there anything else you'd like to add?
I just want to say on Heidmar, people should be aware that there is no, because we have no assets, we don't have any net asset value. So you cannot value my company versus net asset value as people do with Shipper. So we are valued on multiples of our EBITDA or net income, which is the same. So we expect that we will have both growth in our EBITDA and also growth in the multiple expansion, because my peers that don't have assets are trading at 15 to 25 times. I'm only at 5, 6 times. So even if I can get to 10 times, that's a huge expansion in the multiple. And at the same time, we are growing and the EBITDA is growing. So I think that's something to watch out for Heidmar.
Do you think typically people misunderstand or misclassify your company and therefore the way the market prices it?
Assets are trading at 15 to 25 times. I'm only at 5, 6 times. So even if I can get to 10 times, that's a huge expansion in the multiple. We don't have comps, so people look at the industry and start to look at shipping and say, oh, Heidmar shipping. It's like, well, yes, we are a shipping-related company, but what we do in terms of services is different. So I think that's why I'm always talking to generalists, not just to shipping investors, because shipping investors gravitate towards net asset value. They look at assets, they want to value the asset, they want to do the breakup value of the company. This does not apply to Heidmar. So this is something that I'm trying to, get out there as a message all the time.
Pankaj, I'm so thankful for your time. I've learned so much, and I'm sure our listeners too. And we'll put all the links in the description for people who want to find out more about you, about the company, about the services that you can offer, and how to get a better understanding and how to get a piece of the action as an investor. Thank you.